Okay, welcome. We're going to do the weekly charts, stock market analysis of weekly charts. And the purpose of this video, and the reason why I put these videos out at the end of the week, pretty much every Saturday, is to cover the big picture items, really to understand where the market in general is going over the next, weeks to months, even possibly years. So this is the bigger trend analysis. We're looking to see if there's a change in the bigger trend or if the bigger trend is continuing. So let's get right into it. Before I do, go ahead and leave me a thumbs up. I do appreciate that. I have been working pretty hard putting together this training course. I actually just yesterday, quick announcement, I finished the first lecture of that, which looks like it's going to be about a 7 or 8 lecture course. So I finished the first one, and I'll just continue chunking away on it as time permits. All right, SPY. Here's the weekly chart that we have here, and I don't see anything too much that's changed this week from last week. You've got you basically have another down week, minimally down week, but there's really nothing that's technically different. The only thing that I can really see is, this was your uptrend line from 2020 on the week, somewhere right in there. We're still below that. We've still broken that. So in general, kind of a continuation of last week. Now, I do expect, the next couple weeks, because you got the U.S. election, to, the market's probably going to go into a holding pattern potentially, and then we'll possibly see some movement after the election. Let's look at the Qs. Interesting on the Qs, could be playing out. You have this doji right here, spinning top doji or a shooting star doji. Basically, this was from last week. So we had that weekly doji, and I talked about it, that if you have a confirming candle, then it will help confirm that this doji was a reversal candle. And this week we did get that confirming candle. You can see, the Qs sold off this week, was down a lot more than it at one point, was able to recover about half of that into the end of the week, but still closing on a down week with a confirming candle. So what does that mean? Well, it means that there's the potential for a continuation on the weekly chart to continue down to what I see as the nearest support on the weekly chart around 266. That I get from the big price channel of the bull market. So, we're just still above that on the weekly as I zoom in, and what looks like we could be coming back in for another test of this support line that broke out a while ago. Now, this is going to take time. This is bigger picture stuff, so we'll continue to look for signs that there is going to be continued downside on the hourly and the daily charts. And right now, when the week closed, I didn't see those signs on Qs that we were going to get, a big selling, a lot more selling in the short term. So longer term, we could have some more selling. I do think that ultimately we're going to head down here, break this trend line, and then come down and tag this support, and we'll have to see what happens around this support level on the Qs. So that's what we got. And then obviously I've got these longer term trend lines marked out, which I think could play out in, the next or the continuation of the bear market. But, we're not covering that right now. That's bigger picture stuff. IWM, right? So the weekly, again, just right here above support. Really, this week looks pretty identical to last week. So still above 159.60 on the weekly. We're just consolidating up here. The bond market, BND, this thing's seen some selling over the last few weeks. It's obviously continuing this week. And something to point out is we did have negative divergence right here on the weekly. You can see we made a marginal new high right here in the bonds, while the RSI momentum indicator was not able to get back up there, and it made put in a lower high. So that is negative divergence on the weekly chart in the bond market. So we'll have to see, and honestly, you can see it's a continuation really of a big negative divergence in the bond market. So this big negative divergence that's now intact might be, might mean that the bond market is setting up for, a major move to the downside over time. Of course, I don't expect it to just collapse like this. That was more pandemic related, but a move to the downside, and you'll see rates steadily rise. Now, if that happens and you see rates steadily rise, I would expect you'll start to see problems in the stock market. As rates continue to rise higher and higher, you'll start to see problems in the economy and the stock market, given the nature of the debt-based system that we have. And something to look back, since we're on the weekly charts, as I look back, I can't find negative divergence in this bond market instrument BND really until about right there. There was the last time I could see weekly negative divergence, and that really goes back to 2010 to 2011, which was really in the depths of the great financial recession. So if we're seeing signs like that again, then that could be kind of ominous signals of what's to come. Gold continuing its downtrend. You can see on the weekly it had a whipsaw, where it broke slightly above this downtrend line intra-week, and that was evident on the daily chart and the hourly chart, obviously. But the weekly still was not able to close back above, and it still closed back below resistance. Gold continues to be in a downtrend, and so as it continues to be in a downtrend, I continue to expect it to move down towards 1790, 1800. So there's nothing that's changed technically that says that it's done selling off, and in fact it got another confirmation this week that it is still selling off with this weekly false breakout and then recapture back below resistance. Interesting is the dollar actually, and I've got squiggly lines all over the place, the dollar actually sold off this week as well. So gold sold off and the dollar sold off. I don't know what that says fundamentally. Technically, the dollar, is just kind of continuing a downtrend. So we'll have to see what's going on. I still see the dollar as in this big sideways consolidation range. If we start breaking below the lows and get a weekly close below these lows, then that would confirm that we're probably in a continued downtrend. But as of right now, still looks like we're pretty much in the sideways range. You can see that we closed just about right there, where we've had several weeks that have tagged that as support, tagged it, and then this week we closed right at it. So nothing crazy in the dollar. This is Barrick Gold. Now this is a stock that I have that I really I do like to trade this stock, and it's my preferred gold mining proxy. When I'm interested in buying gold miners, I usually go to this one for a few reasons, but this one, you can see on the weekly, big negative divergence right there. And it's even more pronounced just from the last few weeks. You can see here and then right there. So price has been, made a new slightly marginal new high, and momentum continues to be weak, putting in lower peaks in the momentum indicator. And it's back below the resistance, basically 2841. So that really puts all these weeks up here, to me, looks like a false breakout, bull trap. And I now see, Barrick Gold selling off some more. Where does it come down to? Well, we do have some longer term. On the weekly, you can see this longer term trend line down here, which is the longer term bull market trend line, but it really goes down to August of 2015. You've got a reaction, several reactions right here, reaction here. The COVID drop stopped short right there. So we have 4 reactions creating that trend line. So if this is going to continue to sell off, we might work our way all the way down to this trend line. And I don't know when or where it'll tag it, but maybe it'll be at $18 or something. That's just a bigger picture idea, but and we'll watch it, week by week. But if it does get down there, that's a great buying opportunity. Gold is in a bull market, and this is the bull market support line. So this is the most objective area to add to long exposure or enter long exposure, in my opinion, down along this bull market trend line. So we'll watch for that. But again, we do have negative divergence on the weekly. We have a bull trap. Now we just need to see some sort of impulsive selling. And you can see the selling is starting to pick up. It's starting to increase. Barrick had a pretty bad closing down around 26.77. So I am expecting it to come down some more. Financials, they relative strength this week. They weren't incredibly strong, but you can see the week closed up slightly. So we had kind of relative strength this week. So there's, this week there was really a rotation out of tech and into, I saw more, the financials caught a little bit of a bid. ExxonMobil caught a bid. That one looks really good. So where do the financials go? Well, we could be setting up for a back test all the way up around this 27.88 area. I don't know. I don't see that yet in the chart, but I do see relative strength, and it's holding. So until I see something, signs of something changing, I don't see, there's no real negative divergence or anything in place. So we'll see. But I suspect financials are going to be kind of dead money. I think they're going to probably just go sideways, maybe grind a little bit higher. I don't think interest rates are going to just be allowed to rise that quickly. And if they do, then you could expect to see financials rally, but I just don't think they're going to allow interest rates to rise too quickly, which means the financials are probably going to be, probably grind around. They might hold up, but I don't know how well they're going to perform. That's just my gut feeling. Okay, quick run through on the Fangs. Apple looks weak. To me, it looks like last week we did a full back test of this trend line. It's not the best trend line. Here's the lows. I got a couple weeks of reactions right there, and then we did a back test right there. It rejected, continued selling off. This is also a doji here in Apple, a reversal doji on the weekly, and we have a confirming candle. So to me, that tells me that Apple is going to continue moving down. And so we'll watch the hourly and the daily charts for signs of entries or, signals of trades there. But the weekly tells me that Apple should have continued weakness. If Apple has continued weakness, the market's going to struggle. Microsoft closed right here at support, basically, just slightly above. So we've got this support line. Now, if Microsoft breaks down below this 2015.44 and we get a weekly close, then that's a recapture, and we'll most likely head down towards about 199 in Microsoft. Again, that will be not good for the market. Amazon closed right at support on the weekly, and so we will see what next week brings. Google's strong. It's interesting how Google's showing so much strength. I guess it's because of the Snap earnings and Facebook earnings and online advertising play. But Google in general showing strength. There is no negative divergence as of right now on, not over the last couple weeks. There is negative divergence on the weekly going way back here like this. You can see here's your higher high with a lower momentum. If we get a slightly higher high really soon, that would be a divergent high. So we'll watch that, see if Apple, can pop above the highs just briefly and then starts to sell off. Might be a trade there. Oh, Redfin, weekly close. That's a really bad weekly close. You can see we closed down. To me, because of this weekly close, looks to me like Redfin over the next, few weeks or months, however long it takes, it's going to head down to this level right here, which sits at about 31.55. DraftKings. So I got bullish on DraftKings last week. It's a short-term trade for me. It's not, we're looking at the weekly charts here. So, you know, this week, possible reversal. You see we have a little bit of a doji. We'll see if there's any buyers that kind of firm this up a little bit. But in general, you know, pretty weak close. You can see we closed below this 43.65 on the week, which was previous resistance. Should have been support. It was support the last week. This week they closed below it. So that's a bad weekly close. Tesla closing at support on the week. They held support. So we'll see what next week brings. But 420.78 on this weekly chart is support, and we held. Adobe, I'm looking for a short trade on this one, but you can see on the weekly chart we're still above this trend line right here, just kind of holding that support. Almost tagged it this week and still held, but big weekly negative divergence right here is intact. So just waiting for the breakdown of the trend line to signal the entry. PayPal, big negative weekly divergence. I pointed that out in a previous video. Here's your trend line close just slightly below. We're just starting to break. So I took a short position on this one. Looked good on the hourly and the daily. And so I am short on this one. And it looks like we're going to have a breakdown next week, a bigger breakdown. So we'll see how that plays. Okay, so that's all I got for this video, guys. And I'll just go ahead and wrap it up. Thank you. And I'll probably put out a subscriber stock pick video tomorrow. So if you're interested in getting a stock analyzed, leave it in the comments below. I'll go through the subscriber stocks from this last week, find the ones that look interesting, and put those out in the video tomorrow.